next guest and his company have a pretty spectacular track record of helping startups become household names. I'm talking about the Founders Fund. This is a San Francisco-based venture capital firm, and they are behind the likes of Facebook as well as SpaceX and Gazillion, to name just a few. Well, joining me now from San Francisco live to talk about the outlook for startups this year is Founders Fund partner and Chief Operating Officer Bruce Gibney. Bruce, great to see you. Thanks for joining us today. So what is the year of 2011 going to be like for startups and for venture capital firms with money to invest?
Well, I think it could be a very good year for venture capital, so long as people pursue sort of a disciplined investing approach. You know, the past 10 years for venture capital have not been particularly good, and I think that's because venture has sort of deviated from its core strengths, which are investing in companies that are solving sort of very difficult problems with very lucrative solutions. And instead, people have moved towards investing in companies that are somewhat, more comprehensible, much easier to understand, but with much lower return potential. So the sort of the extreme example of this is an iPhone developer that's seeking, an application developer seeking a few thousand customers and revenues maybe in the sort of low millions. That's unlikely to support, except in the most unusual market circumstances, a billion-dollar valuation. Where venture does a lot better, and where it did a lot better in the 60s to the 90s, where we hope to see a lot of deal flow in 2011, is in companies like SpaceX or Facebook or Spotify, companies that are trying to solve a very difficult technical problem, but where the potential upside is much larger.
Bruce, let's talk a little bit, though. Everyone knows Facebook, of course. I don't think we can go a day now without talking about them or seeing them in the headlines. But let's talk about this company, SpaceX. This is a founder, Elon Musk, who is sort of, I know, a legend out in your area there. He's a sort of a brilliant guy. He's behind Tesla as well. But what is SpaceX? And this is the type of investment that just seems a little bit sci-fi-ish.
Yeah, and that actually is one of the things that contributed, I think, to some of its success as an investment. So SpaceX is fundamentally a private space program, and NASA has contracted it to replace the space shuttle for sending up supplies to the International Space Station. So Elon is a terrific entrepreneur, a co-founder of PayPal, of Tesla, and also of SpaceX, which develops private rockets. And is in fact the only sort of non-sovereign entity to ever return a space capsule to Earth, a Dragon capsule, which they did last month. And one of the things I think that's made it a great investment is that it was not. There's a lot of valuation pressure right now for companies that are sort of like easy to explain and seem somewhat less risky. But with a company like SpaceX, it's somewhat hard to understand. It's somewhat counterintuitive that investing in fundamentally your own private NASA could be an outstanding return proposition. That led to a much better valuation. And of course, if you succeed, because there are fewer people attempting to do something that's difficult, you can capture a very, very large market by yourself. And that appears to be what SpaceX is doing. So we're very excited about that investment. And another thing about these companies that are doing something that's somewhat that's much more difficult than sort of like the iPhone application developer is that they, I think, are actually somewhat less risky than people think, because to the extent you're trying to solve a very difficult technical or engineering problem, it actually helps to have the best engineers. And these engineers tend to flock towards the companies that are solving very difficult or very challenging or interesting problems. And we saw this with, for example, Facebook versus MySpace, with SpaceX versus Lockheed Martin, with Google at various points in its history versus sort of everybody. And to the extent you can attract better talent, you tend to outperform.
For a quick question, because Facebook, I could see where it would have had some practical applications almost immediately. But what is the timeline or the time horizon you have in mind when you first make an investment? Oh, you know what, Bruce? Hold on one second there. We've got just a few seconds to our break here, and I want to hold you over through the break and answer the question then. I also want to talk about, the type of returns you see in various sectors. We are back with one of the biggest names in venture capital, Founders Fund. We have Chief Operating Officer and partner Bruce Gibney. Bruce, we left this where I was talking to you a little bit about the time horizon you have with your investments, as well as the type of returns that you look for.
Sure. Well, we're comfortable with multi-year time horizons, in part because we're looking to capture sort of real venture multiples. People are in it for 2x over 10 years. I don't think that's a real venture multiple. There's better things you can do with your money that are a lot more liquid. For companies that are going to really be multi-billion-dollar companies, you have to be content to wait several years. And we're actually, we've developed several programs to allow entrepreneurs to let their companies mature, to avoid sort of the premature exit problem, which we've seen before, where, an entrepreneur is worth, several $100 million on paper, but they have no liquidity, and so they're inclined to sell the company early. And we provide, through our special programs, some modest early liquidity and other ways for the entrepreneur to stop living off, $2 ramen and driving a Mustang with a tape window. And that allows both the entrepreneur and us to allow the company to mature over several years to a multi-billion-dollar valuation.
All right, that actually raises a good point. I mean, what you're looking for is not necessarily easy to find. You're looking for the next big Facebook, and it's not like the guys behind these companies are jumping out of the woodwork, but you do have some very impressive, you have an impressive lineup of partners. You've got Sean Parker, very famous for Facebook as well as Napster, and you also got Peter Thiel from Clarion. How do they get involved, and how do you source investments?
Well, there's an enormous network that we have through the companies that the partners have either founded or backed. So from Facebook and from obviously PayPal, sort of the PayPal mafia phenomenon is fairly legendary. So we got, for example, SpaceX through Elon Musk. And also from people just coming to us through our reputation. We do have a reputation as people who are willing to listen to sort of complex, big ideas that other venture capitalists might eschew as somewhat too risky or somewhat too complex for their own portfolios. So that drives a lot of deal flow our way.
Now let's quickly talk about the sectors. People say, is the internet scene, I guess, is it past its time in many ways in terms of an investing strategy?
No, I don't think it is. There's a sense in which it might be past its prime for sort of, quick flip, vaporware companies. Certainly one hopes that that's the case because it's healthier. But there are a lot of companies that, use the internet to its full advantages, companies like Spotify and Facebook, and companies that view the internet as real technology as opposed to just another address like Rodeo Drive or Fifth Avenue, will tend to outperform. So we do see a lot of value. And the idea that, there's nothing left to invest in venture capital more generally, and venture capital raised something like $11 billion last year. The idea that there's only $11 billion in, like a $16 trillion economy to invest in innovation is just one we can't agree with. I mean, we have to be in this business to advance the frontiers of technology, and there's more than $11 billion worth of stuff to invest in.
All right, thanks so much, Bruce, for joining us today. That was Bruce Gibney of Founders Fund coming to us live from San Francisco. Well, that is it for Fast.